If you're a beginning trader, listen up. This video is for you. We're going to tell you the best beginning trading strategy to get started trading. Here's what's coming up, guys. The multi-day break. We're going to break down this strategy and give it to you step by step so you can take it into the market this very day. We'll talk about, obviously, what is it? What is it comprised of? We're going to break it down, as I mentioned, and a checklist for the strategy. So important. Let's jump into things here, Neil. Get us started with the multi-day break.
So, as you can imagine, everyone understands what a breakout is going to be. You get a key level, support or resistance, or an even number breaking through a price. You get your entry through that break. Multi-day break just means you're indicating in with multiple points of convergence or support or resistance for that particular level. So I'm just going to show Moderna here because when I pull up the 15-minute chart, it gives a couple of examples. And I just want to show right here this break, right in the middle at 365. You had, on the 23rd, you had this top here just shy of 365. You then had a second test a couple of days later. Pullback, a second test of this. It happens to be a higher low as well. Second test of 365. Even on the day that it broke, there was a third test there. So 3 times it had now tested that level before breaking out. And then the other way that this can appear, and I'll zoom in so you can see one to the downside here, is going to show you right down at this 442.5 break. And the reason why this also counts is if you go back, it was also a previous high going all the way back into the 5th, and then you had a breakdown. So the key thing is, yes, you're looking for a key price. It could be a pre-market high or low. It could be a previous day high or low. But it's very important that if you go further back on that higher time frame, you can find that same level as being a resistance or a support level, and there it gives you that multi-day element to it. Now, you could have 2 or 3 tests on the same day. This is not what we're talking about. I want that level tested on separate days, and that's what we got here when we looked back at that 365 break. It's tested on separate days before eventually breaking out to the upside. Just a good way to have a higher percentage trade, the multi-day breakout.
Yeah, and I have another example here, a pretty good one as well with Micron. And we will go over our checklist in a minute here, which will tell us why we're choosing some of these levels and levels of concern for us here. But okay, so here we go. Micron right here, another great example. You have multiple days, and this is a break to the downside. So, you know, you can go long, you can go short on any multi-day break. I would say the same thing could be looked at right here for if we were going to the upside here at 85. So maybe that's something that you'd want to consider. Remember, these are very basic strategies to get started with. So when you're breaking through here, this bottom, you have a bottom there back July 28th. We touched it also July 16th. We can go all the way back to January 28th. We can go back to January 4th, where it was also a key level to break to the upside. And then back in here as well, November. Like, you're talking about going back now 8, 9, 10 months to find some of these key levels. All of a sudden, Micron breaks to the downside. And then look, you're getting one of those big flush outs. So you break that big support area, and then you get down there. I mean, that's a 73 break all the way down to 68, 69 that day. So this is a 1 day in there. We can even zoom in closer in so you can see exactly what this break looks like. So it's a multi-day break going back 8, 9, 10 months. Also recently tested as well before catapulting itself back to the upside. So lots of reasons why this one works. It's time to go over the checklist, Brendan.
Checklist, indeed. We are going to talk about why you have to have reasons for getting into a trade first off, and also why the reasons in this strategy are so important. But guys, I want to touch on the fact that, multi-days means more and more people are going to be looking at these levels because it has traded and because it has tested those levels more than one time, which means there's extra orders or potentially extra orders sitting there waiting as stops as well.
Exactly, and that's the first thing on your checklist, because it's one thing to identify. In this case, I'm going to go right back and stick with Moderna here. It's easy enough to identify, okay, we test and don't get through 365. We test and fail through 365 here, and that actually happened to be right at the open or just early in the pre-market. And then you approach that same level for a third time and then fail, and then you get the final breakout. That's fine. Like, I can look at those clear tops on the way up, but the other thing is, what creates eyeballs to the stock, which gives more interest in it, is, if you may, look at what this symbol was doing going into that test. This is 230, and then a big move up. And this is a clear upward trend that starts slowing down and consolidating. So there were a lot of eyeballs on a high flyer going into this level, and then you did get a sharp retracement. Ideally, you either want to see sharp retracements, followed by, I guess, higher lows, which is exactly what you see here, or you just wanted to see a tight consolidation all the way while it's coiling up. You don't want something in the middle there where it's maybe putting in lower highs and then making that break. So checklist, I have a stock which has enough volatility or eyeballs on it because it was hot. I have clear levels that are defined. I also have the sharp pullback and then higher lows going into the eventual break. So the other thing you can also look out for too is 3 is better than 2 and 4 is better than 3. I mean, the number of times that it tests that level, if it's putting in higher lows, absolutely the better. Now, the last thing I would say is if you have a catalyst, fantastic, right? Like it would be great if on the day that it breaks your multi-day high, you also had a piece of news coming out. Maybe they got an upgrade. So that's fantastic, and it's great if you have that. It's not necessary, but it is important that if you got a catalyst, maybe it gives you a little bit more confidence in it, especially if in that multi-day move you did have volume tapering off. In the case with Moderna, I mean, volume was relatively steady going into it. I can kind of show you here. It was pretty much steady volume the entire time while testing those highs. Nothing really stood out. But if it had been declining, a catalyst is more important.
Yeah, and so let's just go over what those checklists are. It's clear level, okay, it's volume, and then it's a catalyst. So I have an example here right away for a catalyst here that I think is going to work out nicely for us. And that's on Micron, and I'm just using the same examples over and over again here, so bear with me. This is what created that move to the downside here for Micron, right? And it was Morgan Stanley comes out, they downgrade Micron, they say chip shortage here due for a slowdown. So that's going to be the catalyst for this Morgan Stanley trade with Micron. So the catalyst is the downgrade. So that comes right here. This is the day of the downgrade, August 12th, right? So if you see, you can, we're filming this right now on August 13th. So here's August 12th, big story out there, covered by CNBC. Obviously a very, very popular stock here with Micron. So here we go. Right to the downside, right? So that's the catalyst. So that's a check mark, right? And then look at the volume that happens here today. Now, you're not going to be able to predict volume coming in, but, we know that there's going to be volume on that kind of. So you can look here at the pre-market. So we'll just check out here. This is the pre-market trading, some volume happening, building some levels. And this is actually a 2-minute chart. This is me actually taking that trade. So we did go short there, down, 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 down. You can see where we crashed all the way down to 69 there. So that was a real trade taken there by yours truly on this level. So there's the break there, and here's the trade that we took. So this is the same 1-minute chart. There's the break, 72. I mean, we waited for the market to open, 72.50. Market moves down. Here's the break right here. Where we were going to get out is if we ever sort of took out, higher levels. Like it was kind of an easy one because the pre-market gave us some levels up here, $73. So if we're wrong, it was going to be about a 50-cent worth of risk. But there it goes to the downside. So the checklist is made there. Clear level, volume, yes, we checked that off in the pre-market with huge volume in the pre-market. Then the catalyst, yes, the catalyst is there on that Morgan downgrade. So I think we crush it with these examples, Brendan. This is a very, very simple trade. You have to be patient. You need the checklist. But when it's there, this is one of my favorite trades.
And the more you get that test, guys, that's going to be the key. The more times it tests that level, the bigger and the more of a break there will be when it does finally break. So great examples there of actual trades that you too could have taken, guys. The best day trading strategy for beginners for you. Here's Miss B.
Hey guys, thank you for sharing these trading strategies. Dear viewers, please subscribe to this channel to see more great videos.